Good morning, good afternoon. Good morning from Los Angeles, the trading capital of the world. Welcome to Power Hour. We're back on a Friday. Happy Friday, hopefully, for you all. For me, it was wonderful so far. Um, you have days like this that things work out the way you think they should work out, but then there are no guarantees, as we know in finance, in trading. But obviously, I will share my position with you all. So let's take care of some business first. Um, I will definitely answer, obviously, the questions later on. So please save them for later, but keep putting them in the chat. I'll go through the whole chat and then pick them out one by one. Number two, I will share my positions with you. I've been rotating like madman, seriously, like taking some handsome profits and then keeping my puts as a hedge. Although you guys may be seeing that, losses on puts are made up by 2x at least with all the call exposure I have. I have trimmed tremendous amounts. So again, none of this is investment or financial advice or trading advice. If you're following me, what I've started doing is I am posting a screenshot of my open current positions every Monday, Wednesday, and Friday, which I will do after the close again today. I just started doing it this week because a lot of you were asking me that when I do share my position screen or trading screen with you guys, it's too small and it's going too fast. We can't see it. I'm like, okay. I can't zoom in for some reason. I don't know how to do it yet, but that's not the issue. The issue is how do we facilitate that, right? How do we, at your comfort, for you to be able to see what I'm doing? So what I'm doing is I'm taking a screenshot after the market closes Mondays, Wednesdays, and Fridays, and posting it on the channel's channel's community page. Community page is when you go to the channel, you will see halfway down the top, probably a line that says videos, shorts. I think it says live next, and then it says a couple of other things, and then the last tab is community tab. So click on that. You will see the screenshot. Now, between yesterday and today, I bought and sold things that are not even on there. However, you guys will see highlighted the existing positions. And if it's showing a 0, that means I had a position and I either took a profit or a loss. But again, if you're following me, if you do one that is a loser, that's why this is not investing financial advice. Or trading advice. I'm looking at it as a whole. I've said that before, and I always will. I'm trading equity. I'm not trading individual positions. All individual positions add or subtract from the equity, and it's second by second. It's called mark to market. So when I post that, it's from the close of the market on Monday, Wednesday, and Friday. Some I've had for a week. You guys will see. You guys will remember, like Micron, I had for a week. Now today I started trimming. Literally, I trimmed about 50% of the position because I have a 50-60% profit on it. So my point is, some will be there, right? Some are swing trades, or I'll keep for a week, 2, 3, whatever, and some are a day. Again, short-term swing trades. Some are intraday, like it happened today. So if you're going to copy it, please be careful, because by the time you get in, I may be getting out. So, with a warning, you're more than welcome to tag along, right? But please be careful, because you don't have access to me the rest of the time. I mean, I'm on Mondays, Wednesdays, and Fridays for a couple hours. There is, 5 trading days in a week and 6.5 hours a day. Times 5 is 32.5 hours. I'm only on, out of the 32.5, I'm only on maybe 4.5, 5 hours, right? What's happening the rest of the time? I mean, since you don't have access to that, But from what I've seen so far, I scale in and I scale out. You know, I accumulate and then I trim. So I don't do all at one shot because I'm doing different sizes than you guys, obviously. Like if I'm making, if like today, between yesterday, actually Wednesday, to yesterday and today, I traded TIGR, right? And you guys will remember that if you were on the live on Friday. Well, you know, I legged in, right? I started buying the options at like $1. Today, last ones I bought were at 60 cents. Well, then the buying algorithm came in, stock went up to 9.5, options went to $1.50, $1.60. So between $1.20 and $1.50 or 60, actually, last sale, I still have 10 left. But when I show you the position, you guys will see, you know, for a couple of days, I will take the 50, 60%. Okay, because I accumulated 90 options. 90 options is a lot. So that's all I'm trying to say. Now, if you do not duplicate every single one as I'm doing, size-wise, it's not going to make a difference. If I'm buying 10 calls, maybe, or 1,000 shares, you can buy one share of the underlying equity or buy one call option instead of 10. So size is not the issue. My point is, if you're going to tag along, you're going to have an exit strategy on your own. And actually, that's good practice for you guys. Like put myself in the room, and let's say you followed me, put myself next to you and say, what would Sergio do? Where would he get out? Why would he do it here? Right? Because when I'm showing you the positions, I'm explaining it to you. So Mondays, Wednesdays, and Fridays after the market close, latest by 2 p.m. Pacific, I'm posting that screenshot, and it's going to go on indefinitely. That creates complete transparency. I mean, that's my account, that's my screenshots. I don't know what else to do. Last bit of business. So Mondays live, 10 a.m. Pacific, 1 p.m. Eastern is going to continue indefinitely. They're called Trading with Sergio. Okay. Fridays lives, 10 a.m. Pacific, 1 p.m. Eastern is called Power Hour. Those will continue indefinitely. I was doing a midweek Wednesday live Trading with Sergio. What I'm going to stop doing those. So it's going to be bookends, Mondays and Fridays. Wednesday, you know, not a big, you know, trading day as it is. But I truly don't have the time to do it. However, what I'm going to do is, you know, thank you for the support to the channel, by the way. You know, please share and thumbs up while you're in the chat for this. So we created memberships for the channel. We actually did our first members only live stream, which was awesome, a meeting where on StreamYard, I can put all your faces in boxes, right? I can put the link up top, you know, on the chat, and everybody grabbed it. And we were basically, you know, because a lot of people have obviously YouTube names. I don't know what your real name even is. So they all came on and we kept it like a corporate Zoom call, let's say, with everybody's own little individual cubicles. And then it lasted for like a couple of hours. And, you know, we went into some detail. It's like more like a mentoring session, more like an individual coaching session where I can pay attention to individual needs. But you have to be a member in order to do that. So what I've done is members get 2 extra live streams outside everything else a month, every 2 weeks, which is enough time for you guys to do homework, because last week I assigned homework. So when the next one is going to be Wednesday, this coming Wednesday, next week. What's the date? Let's see. Wednesday, the 16th at 3 p.m. Okay. So the members only lives are going to be every 2 weeks on Wednesdays at 3 p.m. Pacific, 6 p.m. Eastern. I could change the time. I have some, you know, room to move. So if you guys want to give me some ideas about the timing, right? I could do it at 4 p.m. I could do it at 5 p.m. So some of you are in the West Coast, some of you are on the East Coast. So I need to get that feedback from you. So email me, Sergio at sergioavadian.com. We'll make it so that all the members can show up, right? Because we're learning a lot from each other. In fact, one of the members had a wonderful idea about ChatGPT, how to use ChatGPT in their education going forward. And I thought it was a wonderful idea. And it wasn't my idea, it was his idea. So, you know, it's not about the money, but then the channel has to run somehow because Chris is my YouTube manager, right? And if I was doing this for money, I would have put the membership at $100, right? So it's not the issue. The issue is I want to help you guys, but then there has to be some ROI, right? I'm a business person, so ROI is important. Although there's 99% of the stuff is free, obviously, as any other YouTube channel would be. So we took care of business. If you missed any of it, I'll repeat it at the end or towards the middle one more time. So I have, let's see. I'm going to answer all the questions at the end. So I have about 8 topics. So my eye is going to be on the clock because I don't want to go into rants. The last topic, though, is going to be about the Robot event that I watched last night. And I tweeted it out this morning. I'm on Twitter. My Twitter handle is in the show notes. It's at Sergio Aved without the IAN. Please follow me. I put my 2 cents in there. I think it was an amazing event. Although it started 50 minutes late. I was like listening to techno music for 50 minutes. But things happen. But I will have my opinion about Tesla, Elon Musk, and the event itself and what what was presented. So without too much delay, I'm going to go into the topics. I have, I think, 7 or 8 today. And Chris was like, what are you doing, man? I'm like, yeah, but I'm going to hit them only 5 minutes each. So my first topic is going to be about banks, the U.S. banks. So U.S. banking earnings are coming out fast and furious. JP Morgan Chase came today. Goldman is going to be next week. B of A is coming. Wells Fargo came today. I will look at the individual charts of those stocks as well, because that's a that industry, obviously banking and finance, is probably the most important industry, one of the most important industries anyway, because without loans, without banks, without ATM machines, checking accounts, all these things, those are the things we use on a daily basis. And, the health of the banking system really interests me on a much deeper level. But then for you guys, maybe it's just having a checking account or a savings account or a CD or something like that at a bank. Well, banks do a lot more than that. And then you guys should start studying how banks function, right? They have many different departments, obviously. But banks, if you take a bank and figure it's a human, turn it upside down and shake it, 2 red cents will not fall out of their pockets. How? Why? Banks are worth whatever their loan portfolios are worth. And obviously they have investing and trading arms as well, such as Goldman and all the banks do. They take risk, obviously, with your money. But the banks are a simple business. Banks borrow from you when we had ZERP at 0% pretty much, and they tack on 5%, 4% on it, and then they'll put out loans. That's it. That's what the banks do, right? We know what happened in 2008 to the banking system because of the housing crisis, right? Hopefully we'll never experience that again. But then the Fed came to the rescue, printed trillions, and then saved the system. But you guys should study it. You guys should study how banks work. How it's not as simple as you think it is. It's really, really a complex infrastructure. It's really a wonderful system. But I wanted to talk to you guys on the first topic about U.S. banks under pressure as JP Morgan Chase, B of A, Wells Fargo, Goldman Sachs, and Citi battle shrinking margins. That's a fact. The reason they're battling shrinking margins is because Fed raised the rate from 0 to 5. Well, when they raised the rates, what happened to the mortgage rates? The banks had to raise the mortgage rates because now you go open a CD account at a bank, right? Or a savings account. Well, they're paying you 4 or 5% as opposed to 0. Now they have to raise the mortgages that they're going to put out with the money, with your money, basically. So what banks do is that, they sometimes they leverage themselves, but basically if you go deposit $100 in a bank, they immediately take $90 of it and put loans out with your money. And they tack on a margin onto that, which is usually about 3% levels. So when rates shot up, loan demand obviously collapsed, right? Housing, mortgages, businesses. When that happens, they need to compete harder. They need to start lowering the margins, that 3% maybe to 2%, maybe to 1.5%. So the earnings are coming out this week, and I have to watch, and I have to pay attention to. So JP Morgan is expected to reveal a nearly 8% drop in earnings, and their earnings came out today. So we're going to look at the chart. While Wells Fargo will likely report a nearly 14% drop in earnings per share, and citing data compiled by the London Exchange. But next week, B of A, right, to report an approximately 14% drop in earnings per share. When they say earnings per share, don't misunderstand. We're talking about quarterly earnings, right? Not overall. And Citigroup is expected to report a 20% drop, and Goldman Sachs is expected to report 35% drop. That does not mean their share prices are going to go down, because mostly they're priced in already. The across-the-board decline is due to a combination of rising deposit costs, just like I mentioned, right? You put the money in the bank, they were paying you 0. Now they have to pay you 4 or 5. Well, the margins are getting squeezed. So weak loan demand and shrinking net interest income. Net interest income is when they take your $100 deposit and take 90 of it and put out loans. That's the net interest. So they're paying you 4. They put out a mortgage at 7 or 6.5. That's the net interest income. And from that, that's their gross net interest income. Obviously, from that, they have, hundreds of thousands of employees and buildings and infrastructure and all that stuff to run, right? So all that has to come out. That's why the earnings are kind of getting squeezed. Although banks are feeling pressure from decreasing margins, which is then related to NII. NII is net interest income. They are expected to generate strong revenues from other banking divisions, such as investment banking and trading. Well, we know that. Why? Because next topic I'm going to talk about is the market. What has the market been doing? Wonderful. Every day, all-time high. I think today is the 45th all-time high that we're hitting. So Goldman Sachs, being the best traders on the planet in anything and everything that's moving, truly spectacular. I mean, seriously, Goldman is the king of Wall Street. And when it comes to trading, anyway, they have the best minds, best of everything. And so that's kind of helping alleviate a lot of this margin pressure. So please go study banking, how the banking system works, because it's part of our daily lives. Without banks, we can't do it, right? And how banks function. Start, learning about these things. Start talking about these things. So my next topic is going to be about the markets, right? Today, I really think today is the 45th all-time high or 46th all-time high we're hitting this year, just this year alone, okay? So the S&P 500 is about to hit, which it did today. It hit 50 trillion in market capitalization for the first time in history. Think about this, people. $50 trillion. S&P 500 now is up 22% this year and over 40% since the Fed stopped raising rates in October 2023. We are in October 2024. Think about it. In a single year, okay, the S&P 500 is up 40%. If you had dollar cost averaged, which I keep telling you guys, where would you be? Where would that every monthly $100 be? Think about it, with the reinvesting the dividends, with all that stuff. Now, there is obviously the other side of the coin here. And Kobeissi letter, which I follow, please, I think it's amazing, amazing, amazing Twitter handle, and just go follow him on Twitter. Is the market unbreakable? Well, we're going to talk about that too, because you guys know my bias, but then I trade. My bias is my own. Yes, I may be thinking negatively about things such as the deficit, such as, the Fed and the Washington and this and that. But there are a lot of things that are coming together this year, such as election years are always good for the markets. What will happen after the elections? I don't know. That uncertainty will be lifted off the market. And I will, when the time gets near, I will give you guys my opinion of what I think is going to happen. But then you always find things that you trade around and, try to make money on the upside. Meaning you have to have a balance. So, are there any headwinds for the markets up 40% in 1 year? I mean, this is just incredible, because the S&P 500 goes up about 11% a year on average, going back 100 years or 80 years. That's the average, meaning down years, up years, unchanged years, but on average, right, it's 10%, let's say. So if, there is this statistic that you guys need to keep in mind. The statistic is, if you're a 25-year-old, and I know some of you are a lot older, but if you have kids, if you have nieces and grandkids and granddaughters and daughters and sons, please talk to them about this. If you have a 25-year-old, and if that 25-year-old just takes $100 a month, not a week, a month, and puts it dollar cost average into the S&P 500 or the triple Qs, or mostly those two, by the time they retire, let's say they're going to take early retirement at 65. This is outside their work. This is outside their income. This is outside their 401 company, 401k. All this is outside, extra. $100 a week. Month. 100. What's $100 a month? 4 people go to McDonald's today. It's $100. Okay. So that $100, dollar cost average, into an index fund, passive investing. We're not trading. We're accepting the 10%. We're accepting down years, up years, recessions, whatever. In 40 years, that $100 monthly investment, including reinvesting the dividends, will turn into $1.2 million. I wish when I was 25, somebody told me this. So if you have youngsters in the family, and you don't have to be, by the way, 25 to do this. What if you have an 18-year-old? Better yet, because by the time they retire at 65, that 1.2 is actually going to, because it's a snowball effect, right? It's going to get to $2 million. Wouldn't you like to have your kids or grandkids or whatever, or friends, to have $2 million extra dollars if they start investing early? And some of you are going to say, well, I'm just too old for that. No. Okay, let's say you're 50. All right, start doing it now. By the time you're 70, and which I'm pretty sure they're going to extend their, Social Security retirement age pretty soon, because they're broke. The fund is broke. In 20 years, that'll turn into some really, really appreciable amount of money. And it's $100 a month. A month. I understand a lot of people are tight, but a lot of people spend money on frivolous things. I keep saying the same thing. Just don't go eat junk food. Save $5 a day that way. There's your $100. Or, okay, go to Starbucks twice a week instead of going 4 times a week and spending $8 on a latte. Take that $8 twice a week, put it in that S&P 500 in $100. So I'm just so passionate about this that all of you should be educating others, because that's a true number. I mean, $1.2 million in 40 years, $100 a month. People will think, no, it's impossible. Well, it is. Please go talk to your people. Go talk to strangers. Go talk to, investing is just the most important thing. We can't count on the government. We can't count on, rich parents. We just got to do it ourselves. And that's the way to do it. So risk appetite in 2024 seems to be at a record height, for sure. I mean, today we're hitting an all-time high. Is this the most resilient stock market in history? It sure seems it is. So S&P 500 has hit a new all-time high today. as I'm doing this now. I don't know what's happening in the background. And it's up 21.6% year to date. I mean, double the average, more than double the average, which is about 10. Since October 2023, the S&P 500 has now added 13 trillion of market cap, and that's amazing. So if I was doing this channel, I don't know when, a year ago, 2 years ago, I would have said the same thing. I'm going to keep saying the same thing until I don't do this channel, which I can't see myself not doing, because I'm enjoying this more than the other channel, actually. Because this is the true financial freedom, not the other thing, okay? This is your way to financial freedom. So do I do it? Yeah. Well, I have a long-term investment portfolio. I have a family of 4. I have told my kids this when they turned like 14, 15, and they started doing it. On the 15, one of them is 20. Actually, my daughter, my wonderful, amazing daughter, is turning 20 today. She's been doing it since 18, and she can't put it because she's working already. She's going to college, 3rd year of college, and she's doing it. If the month she can't do it, I'm giving her the money every month, drip, 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 $100. By the time she's 65, that $100 outside her amazing, job that she's gonna get. She's gonna be in biotech. Just the best daughter anybody can wish for on the planet. Straight arrow, knows exactly what she's going to do in life, unlike a lot of teenagers. I mean, I wish everybody, that type of daughter. And by the time she's 65, and I'm hoping that she'll be working at an Amgen or a Biogen or some of these amazing billion-dollar biotech companies, she's going to have an extra $1.5 million. Outside all that, think about it, people. Just do it, please. Spread the word. It's the gospel. So that's it. That's the next topic. And so, yeah, please do it. Power of compounding, power of investing. True financial freedom starts here. Next topic I'm going to talk about is credit cards, credit card debt, and what has happened to average credit card interest rates we're paying on the balances we're keeping. Now, I have credit cards. Do I keep balances? No. Please don't do it, because it's a wonderful thing to have a credit card. How is it? The bank is letting you float their money for 30 days. 30 days. It's free money. Buy all you want on credit cards. Except that don't buy stuff that you cannot pay it off at the end of the month. Because if you do, then the balances will come in. And this topic is about that. And you pay the piper pretty penny when you keep balances on your credit cards. So U.S. credit card interest rates, this is the average, subprime, prime, people with 800 credit score and whatever. This is the overall average of all credit cards. This is revolving credit, okay? It just hit 23.4% in August. What was it before the Fed raised the rates? Because this is what the banks do also, right? They issue you credit cards. They issue you plastic. They make you go buy stuff you don't need. Refrain yourself. I'm not telling you not to open the credit card account, but pay it off. And if you can't pay it off or not going to be able to pay it off, don't buy. Period. Discipline. Refrain yourself. And over the last 2 years, the rates have soared by 7 percentage points. Why is that? What has the Fed done over the last 2 years, right? They raised the rates from 0 to 5. So when Fed raises the rates, every interest rate that we can talk about, from car loans to mortgages, they're all related to what they're doing. The banks raise the rates as if 18% or 16% they were collecting before. This was the average. Is not enough. Banks raise the rates. Now that the Fed is pivoting and cutting rates, do you guys think the banks are going to be in a rush to lower this number fast? No. They're going to keep it as high as possible. And when one bank lowers it, then the other bank is going to lower it. But it's all about things go fast up when it costs us stuff, and then things go down really slowly, just like gas prices. We all know what happens to them, right? They spike and then they come down 2 cents at a time. I'm like, they go up 30 cents a week and then it comes down 10 cents in 6 months. I'm like, not getting that. Well, we know why that is. US consumers now have a record 1.36 trillion in credit card debt and other revolving credit, meaning they pay a massive 318 billion a year annually in interest. See what happens when you keep balances? See how banks make money on you? So you go give the bank $100, deposit your paycheck. The bank turns around, literally in a credit card, gives you the money back and charges you 25%. Pretty good business, right? But now what's going to happen is credit card defaults are going to come into play because most people are going to go, screw this, I'm not going to pay. Charge-offs are going to come into play. But this is mind-numbing to me. To put this into perspective, Americans paid just half of that in 2019 at 160 billion interest. Why? Because in 2019 we had ZIRP, zero interest rate policy. And the rates on the average rates on the credit cards were about 16-17% as opposed to 24. Meanwhile, this is the key here. Meanwhile, credit card serious delinquency rates, this is 30, 60, 90 late, okay? Those delinquency rates are at 7%, the highest level since 2011. Do you see what's happening here? People are, due to inflation, due to economic slowdown or whatever it is, people are spending frivolously on their credit cards, and now they're not able to pay back. Because once the bank hooks you up and you start making minimum payments, basically all you're doing is paying the bank interest. You're not lowering your balance. And that's the vicious cycle. Do not get caught in that vicious cycle. The credit card debt bubble is popping. That's why I love the Kobesi letter. You know, at the end, always, they summarize the thing, or my opinion gets summarized with one sentence. And here's the chart. Here's the chart with circle, oval around it. Look at that chart. If that was a stock, I would love that. It's beautiful uptrend, right? That's an uptrend I don't like. So, summarizing, if you're going to have credit cards, no problem. If you're going to have debt, no problem. Don't borrow and spend. Have the credit card, have it in your pocket. If your income is not enough to pay off your balance, do not buy. So that's that next topic. And I'm going to go into the fourth one. And this is something that is relatable to a lot of us from the other channel as well. So what has happened to the American people, public in general? Okay. A lot of us have W-2s, right? We work at a company, we collect a paycheck, we may have benefits, we may have 401ks, but due to inflation, those W-2 jobs are not the same as they used to be 20 years ago. And due to inflation, they're getting chewed up, those paychecks. We're not making enough money. So we need side hustles. Well, that's why we all do what we do on the other channel, right? We create a side hustle. We need to make more money because we have gaps in our budgets, okay? And the number of people working multiple jobs in the US hit 8.66 million in September, a new record. Why? That's because inflation is absolutely hammering the American public, hammering it. I am not buying anything the government is saying. Gaslighting to the max. Oh, everything is fine. Unemployment is fine. GDP is fine. You know, oh, inflation is great. Oh, actually, I'm going to talk about the ugly S word coming up. And it's not the 4-letter S word. It's something else, which maybe you guys will also have homework on that one. So look at that graph on the right side, again, from the Kobesi letter. The big drop that it took was during the pandemic, because obviously, but look at it now. It's making a new all-time high. So when that's happening, when people are doing 2-3 jobs, that means their primary job is not paying them enough to cover the bills. Why is that? Rents have gone up. Insurances have gone up. Food has gone up. Everything has gone up 40, 50, 80%, while the government says, inflation is only 2%. Like, who are you guys kidding, man? Right? So understand why this is happening. Macroeconomic conditions are bad for the average American. That's why they're going and getting 2-3 extra jobs, or, well, 2 extra jobs, or maybe 1 extra jobs, or they're getting into gig work, right? Every weekend, people are delivering, people are driving. That's when gig work actually comes into play. And then that's when a lot of you, when you complain that you're not making money, what would happen if there was no gig work? Imagine that. Barriers to entry is super easy. You don't have to go get an interview. Even for a part-time job, you have to go for Target or Walmart or McDonald's or wherever, starter, low end. You need to go get an interview. You need to do this. No, what do you do with gig work? You just download the app, upload your documents. You're making a couple $100 a weekend. Well, that's why people do gig work. And that's what the beauty of gig work is, which I think is only side hustle at these days. It's definitely not a career. So furthermore, the number of part-time jobs has jumped by 3 million over the past 3 years to near record 28.2 million. Concerningly, full-time employment has declined by 1 million since November 2023. Well, what do you guys think is going to happen if we go in a recession in 2025 or a slowdown? Layoffs are coming. More people are going to go into gig work. More people are going to go into part-time work because they have to pay bills. Besides paying bills, maybe they're not going to pay those credit cards that I talked about last segment. They got to eat. They got to put a roof on their head. They got to pay rent, the basic necessities, right? And multiple job holders have been rapidly rising over the last few years as Americans are fighting record high prices, meaning inflation. For millions of Americans, the solution to years of inflation is taking on another job. And if that's not enough, another job. The reality is that even though inflation rate is falling, hocus pocus, not happening. CPI and PPI came out this week. Both were higher than expected. While the Fed is cutting the rates, we're going to talk about that in the next couple of segments. Things are not getting cheaper. They're not. They raise the insurance costs, rents. Are they going down because inflation is going down? Because Washington or the Fed says, oh, inflation is 2%. Don't worry about it. Really? I mean, your rent went from $1,500 to $1,800. Do you think your landlord is going to lower the rent back to $1,500 because Fed says inflation is going down? No, you got to go make an extra $300. Well, your W-2 is not paying for that, right? Maybe you got a raise at your W-2, but I bet you didn't get a raise at 6, 8, 10% every year after year after year, because that's what inflation is: 6, 7, 8% year after year after year. How many of us are making 6, 7, 8% more than last year and the year before and the year before? No, not true. So, and this is what's happening. And chime in. I mean, do you guys feeling this already? Do you feel like you need to hustle more to make ends meet? And that's what's happening in the US at the moment. And if we go in a recession, we'll find out. We'll find out how many more jobs people have to take on. And with the gig work, right? And a lot of you talk to me on the other channel about oversaturation and this and that. This is the reason right here. It's a tailwind for those companies because now they have so many workers that are coming into gig work to make ends meet. But the pie is the same size. The mouse that needs to feed off that pie is the same, but the mouths are exponentially higher. Well, that's why everybody's sliver of the pie is getting thinner and thinner, and that's why you all are making less and less money. So yeah, that's where we are, unfortunately. And next topic I'm going to talk about. This is another gentleman I follow on Twitter, Sven Henrik, Northman Trader. Please go follow him. So this is about the similarities between 2007, 8, and 2024. Okay. In fact, let me just give a plug to John Moser, who is on Twitter and Market Sleuth. I interviewed him yesterday, the under Insiders of Wall Street. That episode should be out. Last time I interviewed Anthony Crudelli, who was an OG of Trader, one before Jack Barugian. Please go check these out. These are the OGs of OGs. Seriously. These are the people I know. These are the people I completely, tremendously respect. And they're giving their time to me to educate you all, to talk about their experiences, because experience cannot be bought or taught. And so I did an interview with John yesterday. It should be out. Please check that out when it comes out. You guys will learn a lot. So there are, and we, in fact, with John, we talked about this. I mean, uncanny similarities between 2007, 08, GFC, Great Financial Crisis, and 2024. Or is it different this time? Okay. Well, according to Sven, it could be the biggest combination of coincidences ever, but nevertheless, it is a freak show. 2007 versus 2024. S&P 500 made a summer high in July on the same date. True. There is a graph right there. The one on top is 2007, and the one on the bottom is 2024. I mean, that looks pretty identical to me. What's happening specifically halfway through since July? The Fed cut rates in September on the same exact date in 2007. Exactly the same date. S&P 500 made a new all-time high in October on the same date. Today. No joke. Today. And S&P 500 peaked for good, and then you guys see what happened after that in 2008, and then we had like a 40% decline in the markets because banking system was about to go kaput. S&P 500 peaked on October 11th. Today, October 11th. Happy birthday to my daughter. But there are, and we talked with John in length about this. Please go check that interview when it comes out under Insiders of Wall Street. There are so many other similarities that it's just like, now, as a trader, see, I'm paying attention to this. But am I foreseeing the same exact result as 2008? No, because there are so many differences between 07, 08, and now. Although I am seeing some kinks or chinks in the armor of this market as well, but it's not like it was in 07, 08, because I know then I was doing mortgages 07, 08, and the way we would approve people would be I put a mirror under their nose, and if there's like if I see them breathing, you get the loan. And then I would send it to Countrywide. Then I was doing these, and I'm going like, this is going to end so badly. If this guy should not be lent $600,000, he's not going to pay it back. But if I didn't do it, somebody else would have done it. And I remember those days. I remember exactly. So that's why you draw back of these experiences, the dot-com bubble, the 07, 08 crisis, the pandemic. So you learn, and that's why you need to go watch these OGs, because they have lived through it just like I have lived through it. So the uncanny similarities are there. We'll see. Today is the 11th. Today is market, is today the top, absolute top? I don't know. We'll find out, right? We'll find out together on Mondays and Wednesdays on Trading with Sergio and Power Hour on Fridays. So the next one I'm going to talk about is the ugly S word. It's not the 4-letter S word that you guys are thinking, because this actually crossed my mind. This has been crossing my mind for a while, but now it's time to break it out. So homework. What is stagflation? Please go read about stagflation. Go read about in history of what stagflation means. Stag is part of stagnant, meaning slowing things down, stagnant, right? Not growing. Inflation comes from inflation. So put those two words together. This is an economic word, by the way. This is not a joke. I didn't make this up. Stagflation. What is stagflation? Okay. Stagflation is an economic cycle characterized by slow growth and high unemployment rate accompanied by inflation. Economic policymakers find this combination particularly difficult to handle, as attempting to correct one of these factors can exacerbate the other. Yes. How? Let's talk about it. Why did inflation roar for the last 3-4 years? Why? I've been talking about this, right? You guys should know. Because the printing machines were on nonstop. Now, they don't physically print because it's too expensive to print paper dollars. They add zeros to the ledger. Now, in 07, 08, they had to save the banks. Too big to fail, put all the bad loans into the other banks, and then Fed cleaned it up. That took only $800 billion to clean up in 07, 08 under TARP. TARP was Toxic Asset Repurchase Program. Sorry. And they all have acronyms for these things. And then the Black Swan event hit, which was the pandemic, 2020. This time, to save the economy, it took $7 trillion, 10 times more than the GFC. There will be another Black Swan event at some point. I don't know when, but there always are. And every 10, 12 years, something happens. So, the reason inflation came roaring back was because of all that money slushing around. The definition of inflation is too many dollars chasing too few goods. And when the pandemic hit, what happened? Supply shock, right? Nothing was coming in because we don't produce anything in this country. We import everything. So the Fed is, pumping the money supply, $7 trillion, $8 trillion. All that money is into the system now. And sure enough, zoop, right? Prices going skyrocketing because there was scarcity of stuff. Hopefully now we're not there anymore. But once inflation is in the system, it's a killer. What did the Fed do next? Raise rates from 0 to 5%. Okay, because that's the antidote to the venom called inflation. But now that they raised the rates with a lag, economy is slowing down. Unemployment is actually 4.3% or 4.2% going up. Okay. Now the Fed is seeing this in the mirror and it goes like, wait a minute, we're about to slow down. We need to lower rates. Otherwise, we're going to go in a recession. Well, inflation is not dead yet. So now they're just kind of, on the brink of this stagflation thing, right? Because just like this last sentence says, as attempting to correct one of these factors can exacerbate another. So what are they trying to correct by lowering interest rates? GDP is slowing down. Unemployment's going up, right? So they are trying to, prevent us from going in a recession or a slowdown by lowering rates. Well, what do you think that's going to fuel? Inflation, the second coming of inflation. So now we have this potential inflation, fire getting rekindled by lower interest rates. But now we have economic growth slowing down. Do you guys see what's happening? That's why I brought this up, because I waited to do this segment for like a month and a half. But now, after today's and this week's CPI and PPI numbers I saw, we need to start talking about this. So you guys will hear this word quite more often now going forward. Stagflation versus inflation, okay? Whatever the explanation, we have seen inflation persist during periods of economic stagnation since the 1970s. Are we going to go into another one of these periods? We know what happened in the 70s. Fed raised the rates to 20%, believe it or not, people, to kill inflation. But we had a Federal Reserve chairman with balls called Paul Volcker, unlike these jackasses now. What's his name? Powell and Yellen and all these useless people. Look, both are not good. But if you were to say, okay, I'm going to put a gun to your head, pick one. I will pick inflation any day over stagflation, any day of the week. Okay? So as a result, the prices rise in response to expansionary monetary policy, which was during the pandemic. That's expansionary monetary policy. Print, 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 pump, 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 right? Get the pumps going. Without any corresponding decrease in unemployment, while unemployment rates rising. Well, now if the economy really slows down and we go into a recession, layoffs are coming, believe it or not. So unemployment's going up. GDP is going to slow down because if layoffs go up, what happens? Our GDP depends 80% on consumer spending. Well, consumers not going to spend, tighten the belts. So GDP is going to shrink. Well, Fed cannot afford that. Unemployment's going to go up. Fed doesn't want that because Fed's mandate is 2% inflation with full employment, which is 3.5%. We were there, but it took trillions of dollars of pump to get us there. But that created inflation. Now we're coming full circle. Now unemployment's going up. Economy is about to slow down. That's why they're pivoting and cutting rates. But then that may just put gasoline on the inflation, which they have not killed yet. And why is stagflation bad? Stagflation is a combination of three negatives: slower economic growth, higher unemployment, and higher prices. The prices went up 30, 40, 50% on everything we buy. They're not coming down, people. Are you seeing your prices that you spend on your necessities, in fact, coming down? Are you seeing your rents come down? Are you seeing your insurances coming down? I don't see it. This is a combination that isn't supposed to occur. Supposed to, but it occurs. And so what is the cure for stagflation? Okay. There is no definitive cure. Honest to God, there isn't any, because what's going to happen is that if to kill inflation, if they raise rates now going forward, it's going to accelerate the job losses. It's going to accelerate the slowdown. Well, now we're going into, see, this is the point that I've been actually talking in private circles for a long time. They put themselves in this box, the brilliant people in Washington and the Fed, that now they're going like, holy crap. Well, we're really slowing down fast. They're looking at the data ahead and they're going like, we need to, pump the brakes on, QT, which is quantitative tightening, and we need to start QE, which they have been doing anyway. That's why the market's at an all-time high, but that's another subject. So now they're in a box. They go, okay, if we keep lowering rates, inflation is going to come roaring back. As if it died. It didn't. If they start cutting, if they keep raising rates from now on, stop the QE that they said they're going to start, which first cut came last month, then what's going to happen, right? They stop doing that, then the reason they're cutting is because they think we're going in a slowdown. So you guys see the dilemma, the quandary that we're in now? Okay, if we raise rates from here, GDP is going to slow down more and unemployment is going to go higher. We can't do that. Okay, if we cut rates, keep cutting rates, inflation is coming back. The devil is coming back. I'm like, now we're in a box. So this is homework for you people. You guys need to understand this. Hopefully by next Friday, you guys will be on the same page on this one. So my favorite topic always is going to be the mortgaging of my kids' future by the U.S. government in the form of the national debt. We're about to hit 36 trillion, people. I started this channel about 100 days ago, maybe 110 days. It was 35 trillion then. We're about to hit 36 trillion. In another 100 days, when I do the show, I'll remind you, of course, all of you, we're going to hit 37 trillion because we're increasing the U.S. national debt by $1 trillion every 100 days. Okay? I'm going to be dead and gone by then, but why are you guys mortgaging my kids' future? Because that's like, all this debt is an anchor on the economy. Stop it, Washington. Stop it, Fed. And so the U.S. deficit this is for the first 3 quarters of the year, reached 1.8 trillion in fiscal year 2024, or 6.4% of GDP. Our total debt at 36 trillion, okay, our total GDP is 27 trillion. Our total debt is 36 trillion now, about to hit there. So we're about 130% of GDP. In what planet? This is going to hurt. This is definitely not kosher. But just fiscal 2024, the U.S. national debt has gone up 1.8 trillion. And I'm going to give you guys the breakdown of our budget. So in your own household, you have a budget, right? You're grossing or bringing in 5,000. You have rent, you have car payments, insurance, food, gas, healthcare, whatever it is, right? You have a budget. If 5,000 is coming, so look at it as 2 pipes, okay? One pipe is the incoming pipe. And let's say it's an inch in diameter. That's where the money is coming in. If you have an outgoing pipe that's 3 inches in diameter, that's the U.S. government for you, okay? That's what they do. So the difference between a 3-inch pipe outlay and 1 inch coming in is what? We got to make up that difference somehow, and that's how the debt keeps going up, because our budget is not balanced. Now, if you do that in your house, you start buying stuff on credit cards, and then you start paying 30-40% interest on your credit cards. That's one fast way to go bankrupt. The only reason U.S. government is not going bankrupt is because they have the power to do what? Print. Well, I'm not going to say print anymore. Add zeros to the ledger. To just create money out of thin air and just put it on the back end, to the deficit, to the debt. Keeps going up. Just keeps going up. And it's going to keep going up. There's no end in sight. This is not politics. Whoever is in the White House, that keeps going up because none of them have discipline enough to balance anything. If I ran my household like this, or if some of you are running it like this, you're going to go bankrupt, guaranteed. So the largest outlays in our budget is Social Security. Debt interest payments has taken second place now. It's above the defense budget, by the way, which just the interest payments is hitting $1.2 trillion to all the people we owe money around the globe, all over the place. And Medicare at $1.5 trillion. So Social Security is at $1.5 trillion. Interest payments are $950 billion. And Medicare is $869 billion. Those are the largest ones. And government spending has increased 10% year over year on our budget. So here's the budget. Here's the chart. U.S. deficit spending remains at crisis levels. No question about it. Okay. So probably in a couple of weeks, not less than a couple of weeks, in 10 days, we're going to hit 36 trillion. And I will remind you guys of that. So this is a pretty simple chart. There is a midline, okay? And there are bars, green bars to the left. That's the 1-inch pipe that's coming in. That's the revenue going into the treasury, okay? The biggest bar is individual income taxes at 2.43 trillion. The second biggest bar is payroll taxes at 1.7 trillion. The third one is corporate income taxes at 529 billion, and other revenue. So if you add those up, right, we're about 5 trillion. That's the pipe, 1-inch pipe that the revenue is going to the government. Now let's look at the outlay, the right side of that. Top one is Social Security benefits, 1.45 trillion. Interest payments, 950 billion. It's higher, actually. And those interest payments, so what's happening is that the debt's going higher. The interest we're paying on those is going higher because we're coming out of zero interest policy period of 15 years. All those bonds that are maturing need to be sold, and more of them, but we need to give a much higher return to the buyers of those IOUs. That interest on the debt, not only the debt is going up $1 trillion every 100 days, the interest rate on those, it's called a coupon, on those bonds is going up. So that number, next time I talk about this, is going to be over $1 trillion. So Medicare is 869 billion. Department of Defense, 826 billion. I'm not going to laugh. It's a serious subject. Why do we need that many weapons? I don't know. But that's okay. But meanwhile, we can't help the people in the Carolinas. I mean, see, do you guys see all this money that we're just putting on fire? So basically, if you add all that up, okay, so incoming was 5 trillion, approximately. Outgoing is 6.8 trillion so far this year. So are we at a deficit? Yeah, 1.8 trillion total deficit. And that's why the debt, national debt, now that money is going to get borrowed. Fed's going to put out the IOUs, and our total debt, net debt, is gone up 1.8 trillion so far. And by the end of the year, it'll be 2 trillion. So what I'm trying to say is that, how about this, Washington? How about this? You know that a trillion, 1.2 trillion in interest cost that we have on this ridiculous amount of money that we borrow? Okay. How about you guys take just 100 billion of that, forget the rest of it, and go help these people, in those areas that there are still bodies floating in the Carolinas. How about we just go rebuild that whole area? You think you can do it with $100 billion? I think we can do wonders with that money. Because now, after that couple of hurricanes, FEMA comes and says, FEMA, we're broke. We need more money. Oh, no, we need to print more money, borrow more money to fix that stuff. No. Fix this. You fix this. If we get rid of $1.2 trillion in interest payments alone, how many things can we fix in this country? A lot. So, this is not my political speech, but I'm actually literally thinking of running for office for my city council here. Start there anyway, because this needs to end. Somebody with math skills has to look at this and say, this is not, workable. This cannot go on. And you guys are going to say, well, what do you want to cut, Serge? You want to cut Social Security? No, I can't, because I have 70 million baby boomers retiring next 10 years. They paid into the system. They should get their money out. Well, there is massive fraud. We need to cut that. There is that defense looks way too high to me. I don't know. I mean, I don't think the weapon makers need that kind of, money going in. Interest payments. How about we balance the budget a little bit so we lower that interest payments, right? I mean, we need to find places to cut. We need to balance this budget. We can't keep doing this. So that's that topic. Please chime in. Send me emails if you guys want. Sergio@sergioavedian.com. And the last one, I made it in 1 hour, so I'm glad. It's going fast. So this is the poster for We Robot yesterday, right? It was in my backyard, Warner Center, 15 minutes from here. Unfortunately, I couldn't attend because good old Harry couldn't get me in. However, I turned it on at 7, like a million of you did, and then listened to techno music for like 45 minutes. Supposedly somebody had an emergency in the crowd. I'm like, whatever. And then Elon comes on and does his little thing, his awkward little way, 20 minutes of it. Let me tell you, people, I tweeted it out today, and I pinned that on my personal Twitter page. It pretty much says everything that it says, but I'm just going to relay that message to you all. I am probably too old to benefit from all these things that I saw yesterday. But yesterday, I saw the future. Now, some of you may be Elon fans, and some of you may think he's an a-hole. Not a personal thing. I think Elon should live forever. We need people like Elon, geniuses like Elon, not only can think of stuff. I mean, how many things is that guy involved in? Right? From Neuralink to SpaceX to Tesla. And Tesla now is breaking into robotics and Robocab and, Robovan and the Optimus robots. I mean, he's doing the boring tunnel and he's sending rockets, more than anybody. And then those damn things are landing back on a little platform in the middle of the ocean. I mean, I don't know how he does it, but the guy also has a sense of humor, unlike Zuckerberg, who looks like, I don't even know what that guy looks like. So I love Elon. I think people like Elon, who contribute so much to this planet, to the people of this planet, should live forever. And what I saw is, it didn't scare me, but it made me think quite a bit. Now, I have my opinions, and then we'll talk about that on the other channel about what I saw yesterday. About the Robocab, I'm not sure. About the regulatory hurdles and this and that. That's why I'm saying in my lifetime, I probably will not benefit from all those things. Now, maybe Optimus robot, maybe, in about 10 years. So when I'm like in a wheelchair, maybe that thing can push my wheelchair to the doctor and drive me around. I don't know. We'll see. But my point is, I saw the future. I love the future. I'm so happy for my kids. But then it made me think of this. If that Optimus robot, like Elon said, can do anything and everything much better than a human, and it doesn't need to take breaks, a lot of people, a lot of average Americans are going to lose their jobs. And please don't come to me and say, oh, but Serge, the steam engine, everybody said the same thing. No, we had to build the damn steam engines by people. Now robots are building these cars and people, right? I mean, don't come to me and say horse and buggy, and none of that is applicable analogies to me. Okay. My thing is, a lot of Americans, average Americans, are going to lose their jobs. I mean, at the end of the show, robots were bartending and serving drinks. Bye bye baristas. Bye bye bartenders. It's happening already. Robots are cooking food now. If you go overseas, literally, if you go on a Jack in the Box overseas now, there's only one person working in the whole place. It used to be 12. Robots are making the food. You have those kiosks that you order the food, and boom, it's showing up. So a lot of people are going to lose their jobs. And Elon has been talking about this for the last, I don't know how long, probably at least a decade now. Something called UBI. UBI is called Universal Basic Income. Are we ready for that? And it made me think, and also made me think, how do I direct my two kids, 20 and 15-year-old? Where can I direct them to for them not to be too exposed to this revolution that I saw yesterday? And so that's what you guys should do. You guys should start thinking about this, because in a decade, if not a decade, 2 decades, all these things that were displayed yesterday are going to be part of everyday life. And that's why you guys should take that seriously. You guys should applaud Elon and the brilliant people between Neuralink and Tesla and SpaceX. Brilliant people, okay? And talk to your families, talk to your kids, get ready for it. Because look, I'm 57. I may not see it, but my kids are definitely going to see it and be in a robocab and own probably a robocab. And I will talk a lot about the unit economics of those things and my pros and cons about it. But I thought I saw the future yesterday. And all these other companies, GMs, Fords, and the legacy automakers, bye. Have a nice one. I wouldn't buy those stocks with your money. They are so far behind Tesla in everything that they do that I'm going like, yeah, I saw the future. I like the future, but I kind of also, made me think quite a bit yesterday about the average people, average men and women in this country who works hard and, goes to work and because not everybody could be a coder, but coders may not even be necessary. AI is coming. I mean, it's so much is happening on this planet over the next 2 decades. That was, and my conclusion yesterday was, I wish I was 20 years younger, because I would love to see this revolution take place. I would love to see this revolution, the effect of this revolution on society. It may be good, it may be bad, I don't know. Or maybe it's best that I'm gonna not be around to see it, because it may not be a pretty picture. But I'm optimistic. I saw the future. I thought, I was like, now I wasn't Google Gaga over it. I have a lot of reservations about it, but it will happen. And to Elon, my hat's off. Some may like, some may not like the guy. Don't think about his politics. It's not about that. To think of something like I saw yesterday, to make that happen, to make it reality, is absolutely mind-bending to me. It really is. So that was my thing. And, we'll talk about that. And so I'm done with the topics. And before I go to my screen, and let me look at the chat. Let's see. Please fire the questions. Hey, Lynn is here. Hi from North Carolina. Roland, Pablo, how are you? We Zoom, El Lenoir. Good afternoon. Good afternoon. Craig from Washington, Vancouver, Washington. Vic is here. Techie B, good. Techie B. See, these are the guys with the little signs are the members. So they're going to have members only this Wednesday coming up. Since there are a few members here, I will put the link out on the channel. All you have to do is click just like now and come in. But then I will share the StreamYard link so we can all see each other and talk to each other. Oh, Paul. Thank you, Paul. A new member. Much appreciated. You think there will be a stock market in 4 years? Yeah, absolutely. Absolutely, yeah. Look where it is now, and, it'll be a little different. It'll be looking different. Okay, Mojotronics. AFR, yeah, it did. I sold two. Mojotronics. Did you make money? Yeah. So there is no such thing as I sold too soon when you make money. Why did you sell it is the question, because I told you Monday, Wednesday, it's going to retest the high. What was the high? 47. I don't know. I don't know what to say. Aren't you reading your books, Mojotronics? As a member, I will give you some crap about this on Wednesday when we meet. Okay. WeZoom says, I think it'll all be done by algo, if not already, and AI. Humans have not. It's been the AI and machine learning and algos have been in the market for at least a decade and a half already. We were using those when I was working on Wall Street, and now the only thing WeZoom has changed is the speed. Speed has increased massively. Okay, Mojotronics is AFR went up to 47, sold too soon at 44. There you go. Pulled 10% profit. Okay, what's wrong with that? Obviously, you did the shares. Okay, Jude, Julia Jacqueline. No, it's not. How's it over? Because it's down 50 cents today. No, there will be pullbacks in an uptrend. So you're calling the top, ultimate top on Palantir? Not a chance. It will have a little sideways to lower action, and then the next leg will come in. Mojotronics, definitely feeling the pressure of basic living. Yes. Barely made rent and have been ignoring most Uber rides while trying to focus on learning trading. Trying to earn capital is getting harder. Absolutely. Absolutely. And I talked about it. My Armenian buddy knows if they come, see what I mean? Same page we're on. We know what's happening. Right, Vic? Yeah, we do. Yeah. Anyway. Scary thing is when robots build robots, and yeah, I don't know. That's a little too futuristic for me. Supposedly, I don't know much about AI, but I use it quite a bit now. I even use it on the channel to cut the shorts. It's like that editor. The thing is doing shorts. All I do is put the link in. It produces like 50 shorts, and I pick the ones and put it on the channel. So before, an editor would get the raw footage, sit there, use their talent, create a short. Is it as good as a human-made short? No, but it's a short. It's going out, and it's costing me $19 a month to put 50 shorts a month, 60 shorts a month, as opposed to each short usually costs 25 to 30 bucks. Look at it. Think about it. 60 shorts times 30 bucks, $1,800 versus 19 bucks a month. And if you all want to use it, it's called Opus Pro, OPUS Pro. It does one. Look at my shorts. Those are all made by AI, by the way. Go look at some of the shorts. Unbelievable. So that guy is about to lose his job. It's a pretty high-paying job, right? That's what made me think yesterday. All this stuff, I don't know what's happening, right? Kuber, can't wait to see the 30. Yep. Yes. Amazing donkey milestone that Washington is going to put on your kids' ankles. It's like, that like is, how in the old days we had the chain gang? They had like the chain and the ball, right? So they couldn't run away. That's what the national debt is. It's chain gang. Okay. Richie, another member, says, can I? Yes, absolutely. So he said those things are going to be like 20 to 30. Well, he always embellishes it. But let's say they're 30 grand. You buy 3 of them, right? You put them out to pasture. And he, in fact, mentioned it that you're going to be the shepherd and your little fleet is going to be the sheep. They're all going to come back to you at the end of the night. So you put them out for ride share. You put them out for whatever, right? They're all going to make couple hundred bucks a day. They're going to work 24 hours. No, she's not a human. And, you're going to get your 30 grand out plus a lot more out of it. Yes, you can. I think that's an amazing business model. So by the time this thing comes around, have enough money to buy a couple of these things and then put them out as a fleet. Easy money, man. Jetson fan. No, they're already here. By far. It's science fiction and Elon. Yep. But I was impressed. You know, we were texting last night. I was giving you shit. I go, where's your guy? Because we Zoom loves Elon. I love Elon too, don't get me wrong. But you know, I'm realistic. In fact, I was like, I hope Tesla stock opens up 10 points. I'm gonna short the shit out of it. And it didn't. By the time it happened, it was, you know, we know I will look at Tesla, you know, in a minute. Okay. 10%. Why 10%? You went down to exactly where you should buy it at 37, 38. And now it's 47 in a week. That's 30%. So you missed a little from the bottom. You missed a lot, well, yeah, from the top. 10% is great. I'm just giving you a hard time. What is this now? Time to jump into, I don't know what's happened. Did it go down? I don't know. I really don't care. Okay, so let's set my screen for you guys. So keep asking the questions, please. This is my position screen. Let me add it. Did it add? Yeah, you guys should be able to see it. Okay, so as this, I am going to take a screenshot of this at the end of the day. I'm going to put it on the community page. Then you guys can compare. Okay, what is this knucklehead doing? How is he trading? What is he? Is he making money? Is he losing money? Is he full of hot air? Is he just talking blah, blah, blah? I'm like, no, I can't be more transparent than this. I'm just putting it all there for you guys. All right, here we go. So I have Lunar still keeping that position. Been keeping it. In fact, added to it. I have 60 of the November 15th. I mean, this is all going to be in the screenshot. You guys can see it. 60 left. 60 of the November 15 expiration, $9 calls with a cost of 87 cents. They're about 72 cents. I have 60 of the same Lunar, LUNR, November 10 calls, November 15 expiration again, at the cost of 56 cents. And they're right now at 48 cents. So I'm down a little bit on this position, not concerned whatsoever. I have my lottery ticket right here. It's a nickel. It's staying at a nickel. I have 5 days left, 5 trading days left. Please, God of God. But then I couldn't care less. If this hits the wall, it hits the wall. I lose $1,500. So I had Billy. I traded in and out. As you guys can see, the positions are zero. It still shows because I sold the last bit today. Made good money on that. CAPR is Capricorn. Me and WeZoom traded the puts on this. He made a ton of money, so he's going to buy me lunch tomorrow. And I reversed actually yesterday and bought 62 calls. That's all I could buy in like 30-40 cent range. And those are the November 30 calls. Stock was like 17. And this morning it hit 20. I sold 12 of them at $1.20, which is great. Fine. As this is my actually $1.10. $1.20 was the high. Now I see what you're saying. Okay. Yeah, I already have orders right here. See, I'm a step ahead of you, Weasel. I have 2 buy orders. I have adding 10 options at 50 cents, adding 10 options at 40 cents. And so I have 50 of those with an average cost of 53 cents, and they're marking at 58 cents. So I'm up a little bit on that. Yesterday and today, between yesterday and today, I bought 30 AST Space Mobile calls. These are the November 25 calls. I don't think these were on Wednesday screenshot. I had 30 of them. I trimmed 20. My average cost is $235. They're $290 now. This is the big one. Tiger Financial, Up Financial, TIGR is the symbol. I bought between $1 and 60 cents, 90 calls. Okay. And last one being at 60 cents today. And it took a huge jump. Still holding on about $9. It was down to 7.5 actually this morning. And I chucked them. I chucked them every 10 cents. I sold 80 of them, completely trimmed. Only have 10 of them. So I'll keep 10, So China is going to announce the stimulus package. It may be good, it may be bad, but I'm not going to take the risk. When you give me that kind of profit, I'm going to take it. My ASTS, I trimmed them at $3. They're still about 293. Micron, I'm going to show next. Here's the Tiger position. So I bought my last 10 today at 60 cents, as you guys can see, and my average sale price was $1.05. That's 45 cents. That's like, I don't know, it's like 70%. So when you give me that kind of thing, I'm taking it. And my last position, open position, is Micron. I told you guys this. I've had this for like almost 10 days now. In fact, what I'm seeing now, there's a trend here, people. What I'm seeing is that when I buy something, it goes against me for like at least a couple days until the things turn. So you guys have a better chance to buy the stuff cheaper than me, for sure. Pretty much on every position. Like, let's say Lunar, my cost is higher than what it is now. I'm going to hold them, obviously. But on Bilibili, you probably couldn't have. On Capricorn, you probably couldn't have. But ASTS, you didn't even know I was doing that. Tiger Financial, yeah. I mean, Up Financial, Up FinTech, yeah. I think you guys would have bought it cheaper than me if you followed it. And Micron, definitely cheaper than me. I bought it. My average cost was $228, $226, I think. It went up to $280. Then these options went down to $170. So you guys could have bought them a lot cheaper than me. And now they're like $3, $293. So I trimmed. I had 35 of them. Now I'm down to 20, and I have sell orders sitting at $3 and $3.15. So during the show, if they get there, those will be done. So I have a lot of sell orders out. Still keep trimming, but I probably trimmed 70%, 80% of positions. I want to be light, very light, except a couple things. About 90% in 85, 88% in cash, and still trimming. If they keep moving the right way, I will trim, and then we'll find ourselves new victims next week. So it was a really good week. It really was. So I'm probably up about $6,000-ish this week, which is good. That's another 4%. Last week was better, about 5.5%. So I'm quite happy about it. So let's look at some charts. Spiders, of course, keep grinding higher. It's just not going to end, which is fine. I'm not worried about it. I think this will end when it ends. The musical chairs will end, trust me. When it ends, I don't know, but I'll be ready. All right, so these are the 2-minute chart. I don't want to look at the 2-minute chart. I will fix this in a minute. All right, so let's look at the daily chart. Oh, this is the daily chart. Okay, so new all-time high right here. Nothing wrong with this chart. I mean, what is wrong with this chart? Lower, higher highs, higher lows. What else is there? Nothing. Not a goddamn thing. Anyway. So higher highs, higher lows. That's the S&P500. This is triple Qs. Triple Qs. Let's go through the same victim list. Grinding higher. Beautiful. Look, man, market's got to do what it's got to do. Then let's go to Mags. Apple. There's a trade coming up in Apple, I'm pretty sure. You guys see this pattern right here? Like this little wedge pattern that is building. If this thing takes out like 232, I think this thing is going to 250. So even on a short-term basis, MACD is fine above zero. I'm watching Apple like a hawk. I'm not going to buy it yet. I'm not going to preempt it, but I'm definitely going to be in there when this moves. Let's look at the Mag 7 in general. Meta, I'm pretty sure, is making a new high. It's the best goddamn acting Mag 7, period. Yeah, there's nothing wrong with that. NVIDIA. Yeah, I mean, we talked about that, right? It's like, it's into resistance now right here, at this high right here, about 136. It's just, this is another, like, this is a continuation pattern. I mean, if I didn't think it was, then I wouldn't like it. I've been saying this, go check the other lives. I said this, It's a much bigger version of this. I mean, you can't argue with price, man. Is it going to 170? Yeah, most likely. Let's look at Google. Worst acting one, actually. Microsoft. Yeah, another not so good acting. Mag. Amazon. Amazon's better. So the best ones are Meta and Nvidia. Apple as well. Then let's go through what Mojotronics prematurely, you know what he did. Yeah, Mojotronics. Yeah, you did sell early. I mean, okay, I don't know, but this looks so easy to me. I don't know why it's not easy to you guys. Okay, I traded it here. Literally on Monday, I said on a pullback to the 50 EMA, you guys need to be in there. I mean, it came and kissed the 50 EMA right here. I mean, I'm highlighting it at 37.25. Okay, you didn't get in there. You didn't get the low. No problem. You bought 38, let's say. Okay, fine. I mean, it's 47. Now it's retesting the high. So Mojotronics, why'd you sell so early? I told you it's going to go retest the high. I don't know what else to say. You should have been, now I would sell. Or I would trim. I would trim if I had it. You had it, right? Okay, well, you're learning. I added AI to my list. It's kind of breaking out. I'm definitely interested in this. So add this to your watch list, please. AI is the symbol, long term. I love these patterns, as you guys know. It's just sideways, sideways, sideways. It's in this massive wedge. I love these patterns. So MACD is moving over 0 finally. Please add this to your lists. Symbol is AI. Next one, Albemarle. These are the lithium stocks. We talked about those, and I will show the little one in a minute. Nothing too fancy, but watch list. I wouldn't do anything yet because it's under his 200 EMA, but it's above his 20 and 50 EMA. PLL is the one I really like, small one. Yep. It's testing that 1475, 15 range. Buy on pullbacks. PLL is a symbol of Piedmont Lithium. AMD. Okay, nothing major. ASTS. This is the one I traded yesterday. Today I'm keeping 10 options at the moment. I don't think it's too late on this one. I think this may go sideways another week. And when the MACD turns, this thing is going to take off, go to 30. So if you guys want to look into it, and this is a low risk trade, right? About here, 23.80. You risk the low, 22, 21.80. So you're risking a couple of points to make 5 minimum. I think it's a good trade. That's why I bought the options, and I'm going to buy the equity actually while we're talking. CAPR. Oh, CAPR is back to unchanged. Wow. Okay. That's depressing. Not really, no. I had the puts. I made actually money. You guys can go look at the screenshots. I had the $15 November puts. I bought them at $1.60, sold them at $1.55, sold them at $2.60. No, $1.10, sold them at $2.10, $2.20. Now I'm into the calls. This is going to go sideways a little bit. Not concerned. Okay, I see Bitcoin. I see what's happening with Bitcoin, and oh, look at that CLSK. Okay, I need to pay attention to these now. And Mara, those are the two best miners. Yeah, they're moving, although they're not moving like MicroStrategy, are they? Mojotronics. Now look at the surrogates of MicroStrategy, turbocharge. Look at Carvana, new high every day. Wonderful. I took FSLR off the screen, as you guys know. A couple of people asked me about DJT. That Donald? That's Donald's media company. Holy crap! That moved from 11 to 25 in 10 days. I didn't even know it was down to 11. Wow, what a downtrend. Yeah, I'd be a seller of that thing now. Although, I mean, I looked at the options actually on this yesterday. They are so expensive. They're like 250 implied volatility. I'm like, it's because of the elections, obviously. So if Trump wins, that thing probably will go higher, probably another 50%. And if Trump loses, it'll go back to 10. This is Hain Celestial. Beautiful pattern. Do I have enough time? Well, we'll find out. We'll live it together. JP Morgan's earnings, their earnings came out. I had added to my, yeah, there you go. Retesting the high. Nothing wrong with that chart. Lunar, the ones I have options on. Oh, I love this. I mean, you guys will get in cheaper than me if you guys go. You can buy the stock or you can buy the options. But you know what? My suggestion to you all, when I'm buying options, you guys should buy the equity. Okay? Don't. Oh my God. Really? Did it really happen? How much is Bitcoin up today? MicroStrategy, an all-time new high. What a beautiful chart. This is the Bitcoin surrogate, Michael Saylor. Micron. I have still 20 calls. Yeah, just we're curling up. We'll hold those calls. We'll add to it. Not concerned whatsoever. NVIDIA, okay, we looked at that. Piedmont Lithium, okay. Okay, let's see, Palantir. Oh my God, it's down 74 cents. Is that why you say it's top? How can you say that? Who said that? Okay, it top for today. It's putting a key reversal day. Okay, I get it. It's extended. I get it. I get all that. But you cannot tell me that this top for good. This was it today. So it's going to do exactly what it did here or here. Look, it's way too far above its 20 EMA. There are standard deviations in these things, way too far. I mean, the 50 EMA is at 35. Stock is 43. It's like, what is that? 8 points. That's like 25% above EMA. And 200 EMA is 27. Stock is 42. It's up. It's over 60% over its 200 EMA. It shouldn't be like that. It should be, okay, now it's going to just correct, go sideways. Moving averages will catch up. And then it'll pop again. So this is the time, if you have Palantir, I would sell calls against my stock position. It's called covered call writing. That's what I would do. There was one I added, used to be something that I used to follow. It's pretty volatile. So it's called Root Inc. It's an insurance company. You guys see the movements in this? We did trade this. So it went from 10 to 80, back to 50, back to 80, back to 40, back to 80, and then back to 36.40. Yesterday, it had a massive, gigantic move, and today it's giving up a little bit of it. Keep an eye on this. Add it to your watch list, actually. Root, R-O-O-T is the symbol. MACD is under 0. I'm not too impressed yet, but when this moves, it's a thinly traded stock. When it moves, it moves. So options are available on this or equity. Let's see. Sleep number. Sleep number is kind of breaking down. Not as hot on it as I was before. Yeah, it's under the 200. There's something going on there. So the only thing is MACD is above 0, pulling back to the 0. I'm not as interested as I was before. Let's look at Tesla. I mean, look, classic, right? Buy on rumors, sell on news, sell on fact. It literally kissed the 200 EMA today. I mean, it's a pretty big pullback, obviously. But my opinion on Tesla is this. If you want to be a jockey and trade Tesla, go knock yourself out. But as I said on the last segment, I saw the future yesterday. Tesla is only worth about 880 billion, which is actually all legacy car companies combined on the planet, including GM's, Toyota's, Porsches, Mercedes, and BMWs. If you add all their market caps, Tesla is higher than all of them. So obviously, Tesla is not being treated like a car company, because if it was, it wouldn't be 200, it'd be 20. But I think what I saw yesterday, it probably does not justify this price. But with Tesla, if you want to be part of the future, I don't know. I think, you guys need to be in there. I don't know. I'm just really I was fascinated by what I saw yesterday. So Unity Software is one that we looked at. I like this. So it broke out on really good volume. It's right under his 200. Okay. Now Unity used to be a $42 number, and then if we go back, this was a takeover candidate at some point. Oh yeah, this used to be like a $200 number. We're down to 20. Okay, people, add this to your watch list, please. Please, 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 with pretty please on sugar on top. Unity, U is the symbol. Had a nice big pop after going sideways above its EMAs. Came into resistance right in its 200. It's messing around. Volume is decreasing. I will definitely, actually, I may buy some of this today. Again, market goes up, market goes down. It doesn't really make any difference. Uber, new all-time high, gapped up. Tesla's demise was good for Uber, I guess. Even Lyft is up today. Well, let's take a look at those two suckers. Uber, all-time high, people. Gap up on top of that. Beautiful chart. Hate it or love it. Stock is 86. Company is worth 172 billion. Dara is running in circles and high-fiving everybody up in San Francisco or wherever the heck he is. Lift the little tree who's dying under the big tree. That thing is up to 13 and a half. I mean, to each their own. I will never own those stocks. Oh, another one. Upstart. I don't know, man. Making new highs. So uptrend started with the gap. I traded S out of it. This was the catalyst. Earnings. Uptrend. Lasted. Pull back to the 50 EMA. Making new highs. Those are the things that you guys need to pay attention to. Okay? Simple. Make it simple. And I said this on Wednesday. I bought actually stock. It's in my long-term portfolio because I'm lightening up on the Chinese stuff. I will show you the Chinese stuff that I'm involved in. What did I say? This is Zillow. I said close to it. If between 58 and 60, it does this thing and then takes off on good volume. Low volume pullback. I mean, this thing was 70, pulled back all the way to 58. Now it's turning up. 61. Still in the buy range. I like it. Last couple, Alibaba. If you guys follow me in this 3.5 months ago when I started the channel in the mid 70s, I took profits. I sold close to me. I sold a little bit more today. So I'm probably trimmed 60% of my shares in my long-term portfolio. I'm just telling you guys what I'm doing. Billy, right on support, right at the 20 EMA. I traded this actually, so I'm all out of the options, but I will probably look to get back in. The one that I traded actually heavily today was Tiger. TIGR is the symbol. And we even talked about this one and CAPR. We talked about how to treat parabolic moves. Okay, remember that? I bought puts and made money on these. You guys can see all the stuff. 890, reversal day. This would be the least favorite of mine. It's just pure trading, really. So don't do this one. If you're going to do Billy is good. JD.com. Right? Look, that thing didn't even come down. By the way, they're going to announce the details of the stimulus package tomorrow. So buy it at your own risk. Baidu. Yeah, they're all broke out. Big moves. Okay, my mentors say big moves start with big moves. Yeah, those are big moves. And last but not least, I'm going to talk about the inverted 10-year, 20-year T-note. Isn't it ironic that Fed is cutting rates? Okay, so when this thing is going down, that means interest rates are going higher, not lower. Because the bond market rules, bond market is telling a completely different story. While the stock market's making all-time highs, the interest rates actually, the bond market is too big even for the Fed to manage. Bond market interest rates actually are raising the rates on the 20-year note. So the Fed is cutting the rate, the bond market says, no, you're wrong. Inflation may be coming back. So always pay attention to the TLT. I'm not telling not for trading purposes, but when TLT is moving and this is moving lower, that means interest rates are going higher. That means stock market is not going to live too long prosperously, because the bond market knows best. So if I can show you guys this, okay, you guys see here, the TLT was at 155. This is when the zero interest rate policy ended. Then the Fed raised the rates from 0 to 5.5%. Look, that's why TLT went all the way down to 82. Okay, all right. Look at the S&P 500. Look how uncorrelated it is now, but for a certain time, it was super correlated. This is the SPY. Okay, this is the same duration, same period, by the way, between TLT and SPY. Okay, this is this S&P 500. When Fed was raising the rates, do you guys see what happened to the S&P 500? It went from 460 down to about 340, about a 30% correction. Okay, when they first started raising the rates. Now, TLT, which is the 20-year note, look at TLT. TLT is actually, interest rates are actually going higher again, but the S&P 500 is not even caring about it because everything is fine. Bonds are wrong. Bonds are never wrong, people. Bonds tell the story of the economy. When bond market raises the rates, that means they're scared of inflation. And look at the S&P 500. So how's this going to end? Well, I don't know. We will all watch it together. But it's definitely, the similarities, as I talked about, are uncanny between now and 07, 08. The chart, not the economics part. Definitely the charts. So I'm going to answer some more questions and say goodbye because I need to go take my daughter out to lunch. All right. Okay. All right. Oh. Okay. Okay. Mojotronics bought at 38. Okay. Well, see, if you only made 10%, that means you sold it at like 41, 42. Is that what you did? Okay, you just left 10% on the table. Okay, well, I told you it's going to 47. I don't see the finances of Robotaxi to be 10. Yeah, I don't either. See, you're saying all the correct things. I did not expect a two-seater. I don't think that makes sense. I agree. See, this is it. I should say this exactly. I'm going to say this. Yeah, Waymo's definitely ahead. But Waymo's costs are much higher. Yeah, correct comment. So I agree 100%. Vic says, Sergio, don't you think you should start? No, November is plenty. For the amount of the move I'm expecting, Novembers are plenty. I will start December's on certain things because you have, after November, December is actually a short option month. You have Thanksgiving, you have a lot of, at least few days off. So instead of 20 trading days, you're going to have less. But November for now is fine. The other thing November is fine for is because it also covers the elections and 10 days after the election. So I'm okay. But sometimes, short-term options are good. It all depends on implied volatility and what kind of move I'm expecting, how long am I expecting to hold these things. That's why when I bought a lot of these things, I bought Novembers, especially on Micron and ASTS and Billy and whatever, because I'm going like, if it doesn't give me the move, I have some time to hold. So time decay is not going to wipe me out right away. On my Mac, all your positions, the text data breaks up when you project. I cannot read. Yeah, that's why I'm posting them as a screenshot on the community page. What else I can do? I can't do anything else. Well, when I've shown you here, yeah, but on the screenshot, why? You can zoom into the screenshot. You can see that. I don't see it. I see it. I look at my phone. I just click on it, open it, and zoom. Yeah, well, you got to take your pick, sleep or money. It's okay. You made money. Yes, 100%. I wasn't emotional or anything, but I thought just what brilliant people put that together. It's unbelievable. Unbelievable. Long just means own nothing to do with time to expiration options. I didn't get that one, Rich. Long just means own nothing. Okay, you need to give me some context on that. I didn't get that. Yeah, all of you hate Uber. Yeah, you guys all wish you should have bought Uber when Upfront started at 23 bucks. Stock is 80, 83. Come on now, stop the hate. They got to do what they got to do. You guys got to do what you guys got to do. You got to join the party. 23 to 83. You know, if I was doing this, then I would have told you I'll buy Uber. I mean, you can't make, you know, they're doing their job. You guys got to do your job. So I don't know. I don't mix emotions with these things. Like I told somebody yesterday, I go, if I think something is going up, I will buy it. If I think something's going down, I will short it. If I think my mother is going down, I will short my mother, and then we can kiss and make up later. I have zero emotions in any of this. So, any other questions? All right. So, grab a membership. Okay, there's a start question. Oh, Paul, thank you. Paul just became a member. Thumbs up. Thank you, Paul. Support the channel. Grab a membership. Next membership live stream coming up on Wednesday, 3 p.m. Pacific, 6 p.m. Eastern. Join. There will be a link, obviously. It'll say members only. You just got to click it, come in. I will put the StreamYard link in. We all can look at each other instead of me just looking into a blank camera. And you guys will get a lot more mileage out of that. If I went up to 47, I sold this. Okay, you keep saying the same thing. Don't worry about it. You're done. You made money. You made money, buddy. Why are you concerned? You made money. You keep hitting yourself on the head with it. Not going to get any better. Nobody's going to give you the shares back to you at 44. You just wait now and then, learn. Okay. You're repeating that. Are you guys repeating this on purpose? This is it's already done by algo. Oh, never mind. It's my bad. All my bad. All right, let's look at Unitree Robotics and then I'll go. Long means own. Hold on. Rich, you can ask me this on Wednesday. Long means own, short means borrowed shares, right? Yeah, you borrow and then you short shares. Long means you own it, as far as shares are concerned. Yeah, that's what it means. Okay, you will learn this stuff. Hey, you made 10%. Doesn't matter. Beats doing 10 short trips, doesn't it? Just got to keep growing your equity, man. That's it. Just trade your equity. Unitree Robotics. Is this a public company? I don't know. We'll take a look. It is? Okay, cool. Okay. Don't worry about it. That wasn't my fault. Yes, thank you, Wizoom. Wizoom is buying me lunch tomorrow. He made so much money this week. Mojotronics, yes. Yes to... Oh, you mean public company? Okay, let's take a look. And then we'll leave after that. What was the name? Unitree Robotics. Okay, let's take a look. Unitree. No, it's not a public company. There's Unitronics, UTRX. Is that it? It's 40 cents. No, it can't be. It's not a public company. Not that I know of, unless you know the symbol. Send it, and then I'll know. So what am I going to do the rest of the day? I probably will add to my Tiger that I sold. Maybe to a little snip. 893. My lunar is doing fine. I'm still holding a position. 768. I like it. I like it. And my micron, I'm holding. ASTS, I'm gonna buy the shit out of that. Micron is fine. I'm gonna buy before I leave. You know, I don't like buying things on Friday. So you guys have set ASTS. Okay, I'm giving you guys the symbols. This is not financial or trading advice. I like these charts, these types of charts. ASTS may go sideways a little bit longer. What else? Let's look at those surrogates, Bitcoin, the MicroStrategy surrogates, MSTU. Hey, Rich, remember MSTX? Holy shit, it's 60? I'm just messing with you, Rich. Oh, it's 42. What did I tell you to buy that? 18? Yeah, I think so. I'm messing with you, Rich. It's gonna be fine. Chill out. I don't know. What else? Let's look at this. Some robotics. ACHR is Archer. That's the EV tall. Hey. I mean, okay. Back down to $3 from 5.5. Hey, this may not be a bad idea. I mean, it's a shit chart. Nah, don't worry about it. Joby. Okay, if Bitcoin is going crazy, which it looks like it is, and MicroStrategy is going crazy, which it looks like it is, IBIT is the BlackRock Bitcoin. So I don't understand what's going on. Bitcoin is not going crazy. Why is MicroStrategy going crazy? BITX is not going crazy, which is double Bitcoin. Still in a downtrend. But when that thing breaks that downtrend, holy crap. Yeah. So we know what to do. Why is MicroStrategy going up like that? Huh. MicroStrategy is going up by itself without Bitcoin going up. Because I know Bitcoin is not up. It's up a little bit, but it's still 61, 62. Man, when this pattern resolves to the upside, wow, are we going to make some money here? Woo! Yes, sir. Okay. All right. So you guys got the game? ASTS, obviously, you know, the usual suspects, PLL, all the usual suspects, beautiful charts coming off. What else did I tell you guys? I'll see you guys Monday. So I'm going to gracefully bow out and go have lunch with my lovely daughter. Did I miss anything? Kava. Okay. New high, I bet. Yep. So these are the stocks you guys got to look into, man. The rest is Apple. Definitely is a trade coming up on Apple. I'm telling you guys. Even like the weekly options in this I may trade. So if you guys lucky enough on Monday, if it's happening then, I will jump on it then. So that's it. 2 hours is enough. I hope you all have a great weekend. Be safe. Okay, it's not public. Okay. Profit from MSTU, MSTX. Okay. Yeah, but look. Okay, if you didn't sell MSTX, where would you be? Yeah, Joby look interesting. Joe, I mean, it's not technically it's not interesting. It's under his 200, under his 50, but it's kind of at a trading range, kind of a, you know, kind of. I wouldn't buy it, but if you want to buy it and hold it, and for a pop to maybe 4.5, 5, yeah. But not my cup of tea. Anyway, so you all have a great weekend. You'll be safe out there, please. And I will see you guys Monday for Trading with Sergio. Wednesday is the members only meeting. So we're doing Trading with Sergio on Mondays, Power Hour on Fridays. Every 2 weeks, I'm doing members only live stream, 3 p.m. Pacific, 6 p.m. Eastern. And that's it. Please support the channel. Please put a thumbs up. Please share the videos. Please share the links. Please comment. We're doing our best. Channel's growing. Not growing as fast as I like, but then I'm not doing it for YouTube money. So, but then that's it. Thumbs up. Much love. See you guys on Monday at 10 a.m. Pacific, 1 p.m. Eastern.